This was the first rate cut we've seen in almost 11 years, and yet you're calling this a neutral move. Why?
Certainly 25 basis points is something. I think the markets were expecting the Fed to lean into the cutting cycle a little bit more than Jay Powell did at the press conference. And, after everything he said, my expectation is maybe one more, maybe two more, which is a lot less than had been expected.
I mean, he also talked, though, about how they're not going to roll off the balance sheet quite as quickly. They're going to end that faster.
They're ending it. They're going to end with the balance sheet around 3.8 instead of 3.75, maybe, trillion dollars. So there's a little bit there. But, the big question about this meeting was how much does the Fed lean into future cuts? What's the forward guidance? And there, I'd say it was a little bit less than many in the markets were expecting.
Binyamin, were you surprised by this as well?
I was really surprised, and I was surprised by the story that the Fed is telling. They have a real problem, which is that they keep on failing to hit their inflation target, and there's a real argument that they should respond to that by trying a lot harder. But instead, we heard Jay Powell yesterday talking about trade problems, which it's not obvious that monetary policy can address, and weakness in manufacturing and in confidence. And then they roll out a very minor move and suggest that they're not entirely sure what's going to come next. It just all felt very muddled and kind of pointless.
Although, if you look at the economy, you look at the data that's been coming in, the Fed has consistently said it's data dependent. The data has been pretty good. It shows that things aren't doing badly here. We've just heard from other guests today who say that's what they hear from consumers. That's what they see in those markets. That's what they see from CEOs and from companies as well.
That's right. And that's why hanging the rate cut on the state of the economy felt like a puzzling thing to do. If there's a real concern, it's this concern that we're going to get stuck in a Japan-like posture where inflation is just sluggish in perpetuity. And what you need to do to get out of that is to really hit the gas on monetary policy. By not doing that, by not even talking about that after months of making it an issue, and by instead focusing on the economy, I think the Fed left a lot of people scratching their heads and saying, what are you guys doing? Why are you doing it? And what's going to come next?
Nathan, what's the credit market telling us?
So my concern is that there are always global risks. And, you can always look around and find a reason to cut rates. And so we don't know really what prompted this particular move or how they're going to size this move. And I think that uncertainty about where they're headed, coupled with it being a bit of a disappointment relative to some expectations, the markets have been pretty volatile in response to Jay Powell's, particularly the press conference. I think they absorbed the statement quite well, but it was the press conference that really shook things up.
Do you think that what he said was genuine? Do you think he was trying to posture? Do you think it was a mistake? Do you think that he's sitting around afterwards going, I wish I didn't say it that way?
The Federal Reserve, I think, is trying to do something that's very difficult. And that is they're trying to pull off a fine-tuning operation here where they say, well, it's basically OK, but we think we can make it a little bit better through a little bit more monetary accommodation. And I think that is a very difficult message to articulate. Back in the day when Greenspan was doing this, he didn't have statements. He didn't have press conferences. He'd just do it, and then the markets would guess why. So the communication of it was much easier. But I think this is a challenging goal that they've set themselves, both from a policy perspective and maybe even more so from a communication perspective.
Nathan, the last three core PCE month-on-month readings are heading higher, not lower. So this whole idea that inflation's collapsing, we've got a Japan situation, isn't really realistic right now. Do you think one more core PCE heading higher is going to put the Fed on pause?
I was hoping that the Fed would clarify a little bit more than what we heard on what it wants in terms of inflation performance. But my read on what the Fed is looking for is I think the Fed is now in a position where they are actively seeking an overshoot of their 2% target in order to establish and affirm the symmetry of the target. So I think getting back to 2% by the end of this year, early next year, may not be good enough for them. I think they want an overshoot. And so I think it will take more than a couple of good ratings to get there.
Hey, Binya, that's a good point that Nathan brought up before, too. Just the idea that it's much more difficult when you have these press conferences, when anybody can get up and ask questions. It's a much trickier, fine line to try and walk. It's something that worked for the Fed when they were trying to articulate to the market what was coming and telling them that there were going to be very low rates for a long time to come. And don't worry, we want you to invest. Is it the best policy now?
I think, a press conference like the one yesterday can be a great help to an organization if you've got a clear message and a clear story to tell, and the Fed has used it effectively in the past to do that. The problem yesterday is that Jay Powell seemed confused, and when you're confused, a press conference is going to magnify that confusion. And so I don't think that the mechanism is necessarily the problem. I think the problem is that the Fed needs to decide what it wants, or if it's decided, it needs to do a better job of explaining it to the rest of us.
Isn't there an answer that sometimes you're not certain, you're going to wait and see what happens next? So maybe I wouldn't be completely decisive at this point.
No, absolutely. They clearly are dealing with confusing times and confusing circumstances. But even some of the framing yesterday, some of this question of what are you doing and how does it lead to the result you want, I think is really relevant. If your problem is trade uncertainty, you need to tell a story about how cutting rates by a quarter point is going to help corporations get over the hurdle to building their next factory. That's not a story that's real clear to me.